All paths lead to Bitcoin. I'm not calling for a collapse of the economy per se, or the financial system. There are definitely things that can be band-aid solutions, but no matter what, the 100% certain outcome is fiat debasement, because they need to continue to print more fiat to pay the debt burden. Okay, as long as the market accepts that, the system can continue. But the only 100% certain conclusion is the debasement of fiat, which means you need to set an investment portfolio that protects you against that 100% certainty.
Greg Foss, a well-known Bitcoin enthusiast and former hedge fund manager, recently discussed the global debt crisis, currency debasement, and the ultimate end of the fiat Ponzi on the Understanding Macro podcast. During the episode, Foss, who has over 30 years of experience trading high-yield credit in the financial markets, explained that we are dangerously close to the unraveling of the fiat Ponzi and that Bitcoin is the only viable insurance against that eventuality. Foss is a known name in the Bitcoin community, especially on Twitter, where he shares his deep knowledge of the macro environment and his experience managing risk in the financial markets. According to Foss, Bitcoin is the most asymmetric trade and investment opportunity he has ever seen. He also discussed the current precarious situation of the U.S. economy and the rising interest rate environment, comparing it with the Volcker sledgehammer environment of the 70s. However, the debt spiral is now so large that the economy cannot grow fast enough to keep up with the expanding debt burden. Foss also pointed out the issue of the interest expenses for servicing the debts, which he says are going way overboard.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The problem has always been the system, but the system itself has never been as levered as it is now. So what happens as you increase the leverage in the system, the frequency and severity of the downturns increase, okay? And so, but let's be clear, the fiat system has always been this way. And history will tell you that fiats always fail for this exact reason. Because they print money. In the times of the Romans, they clipped the edges of the coins and took out the gold and the silver from the coins. So fiat systems always fail. And we're just recreating that same problem in a modern age with central planning that is not just central planning of, let's say, the Roman Empire. It's the central planning of every single fiat country in the world, all operate on the same model. So we can blame the system. We shouldn't be surprised because those systems always fail. But then there's a great reset and you start fresh again. But the pain to start fresh is monumental. And people just forget that, you know, these crises have happened over time when fiat fails. And you can look in Venezuela right now, or Argentina, that's defaulted 4 times in my career. But we're not used to it in G7 countries. And here's the problem. It's now caught up with the G7 countries, because when in the 1980s, when inflation was really high, there was a Fed chairman by the name of Paul Volcker who did raise interest rates to close to 20%, 20%. But the difference was the federal debt at that time was far reduced from the current level of over 120% of gross domestic product. At that time, it was around half of that. And it's you can actually raise interest rates when your total debt to GDP is there, because the interest expense on the debt will grow, but it won't bankrupt the whole system. Now we're at a point where total debt to GDP is 120%, which is to say when you raise interest rates even to 5%, the interest expense on the existing debt is growing so quickly, you can't keep up with the expansion, the organic expansion of the debt. And that's where we are right now. So the system is to blame, but we are now at a point where we can't reverse it. You see, after the great financial crisis, there was the chance to be able to reduce this mathematically. I don't think the political wherewithal existed to reduce the debt, but mathematically you could have achieved that. Now it's impossible to achieve that. We are at a point where the debt spiral is so large that no matter what you do, you can't reduce that debt burden enough. The economy can't grow fast enough to keep up with that expanding debt burden. It's mathematically impossible.
Foss was one of the 5 multi-signature key holders of the Bitcoin raised for the Freedom Convoy trucker protests in Canada. The truckers were protesting against tyrannical COVID-19 policies, and they had raised almost $8 million on GoFundMe when the platform suddenly froze the donations. The Canadian government also asked Canadian institutions to freeze the bank accounts of people with connections to the protests. Through the protests, Foss and other Bitcoin advocates proved Bitcoin's censorship resistance and the unreliability of the traditional financial industry. Foss explained the importance of investing in Bitcoin, especially above other assets like real estate and bonds. This is crucial as the world faces ideas like CBDCs, digital passports, and other ideas being floated by the World Economic Forum elites. The banks are happy to do Prime Minister Justin Trudeau's bidding and swallow the action immediately without even court approval.
You can have a bolted down asset called real estate. It's just not that portable. But people have done okay in real estate. And it's not really that the value of your house has gone up. You could probably look back and say, you know what? My marginal utility of a house right now is about the same as it was in the 1960s. The difference is it takes more units of account to buy the same marginal utility because the value of that unit of account has debased so much over the past 60 years, right? My parents bought their first house in like 1960. They paid under $20,000 for a house that would now be worth easily over $1.5 million. And that's nothing to do with the marginal utility of that house. And it's all to do to the purchasing power of the unit of account. Assuming I am not giving financial advice, I'll just tell you what I do. I own hard assets. Yeah. I own real estate. I own gold. I own silver. I own Bitcoin, the best hard asset there is, but I'm not all in on Bitcoin. So I'm close to 60 years old. And if I was 30 or younger again, yeah, you're up against it a bit, but maybe you don't actually have to buy that house that everybody always told you to aspire to, because what happens if you buy that house and the world goes to heck in a handbasket? You don't want to be bolted down to a fixed object like a house. If you can't get out of the country because you can't sell your house or whatever, I'm not saying everyone wants to leave Canada, but that is one of the considerations when you own a hard asset. You have to understand portability, liquidity, transferability, all the things. And if I was under 30, I would actually focus on accumulating a given percent of my net worth in Bitcoin. Because Bitcoin, I believe, is the best asymmetric trade opportunity and investment opportunity I've ever seen in managing risk for over 35 years. I was primarily a credit trader. And so junk bonds and distressed debt, but it's no different than evaluating risk return and getting an anticipated return on your investment. Okay. Every investment is the same. You evaluate the risk. You say, for this level of risk, I need to anticipate a return of X. And if the risk is twice as high, the return should be 2x, okay? Like, I mean, that's a rule of thumb that you have to increase your return as the risk increases. And the funny thing is that Bitcoin appears to be risky, but the appearance of risk versus true risk are two totally different things, okay? So I actually believe Bitcoin to be incredibly unrisky. In fact, I believe Bitcoin is insurance. And since it's insurance against the fiat Ponzi, I advocate everybody needs to own some Bitcoin, or else they're actually taking higher risk by owning zero.
Allocating a significant part of your investment portfolio to Bitcoin may be the only assurance you need to weather any storm that lies ahead for the global economy. Bitcoin is the only hard asset that is sure to survive the gradual debasement and eventual collapse of the world's major currencies. It's important to consider what percentage of your investment portfolio is in Bitcoin. Please share your replies and comments on Greg Foss' interview in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.